What if I told you the first forex traders carried swords instead of laptops? What if the markets you trade today were born in deserts filled with bandits? Before hedge funds, before banks, before billion-dollar liquidity pool. There were men risking their lives for a spread, and if you think trading is stressful today, imagine crossing 1,000 miles of desert without knowing if you would survive. This is the real origin of trading, and it's more brutal, more dangerous, and more inspiring than you've ever imagined. This is not a fantasy. This is happening right now across Nigeria, Kenya, Ghana, Tanzania, South Africa, Senegal, and dozens of other nations. And if you're watching this, you already understand that crypto isn't just an investment, it's a revolution. But today, we're going deeper than just charts and candles, a continent left out. To understand why crypto matters so deeply in Africa, you first have to understand what the traditional financial system looked like on this continent for decades. Over 57% of Sub-Saharan Africans are unbanked. Not underbanked, unbanked. No account, no credit history, no access to investment products, no way to participate in global markets. The traditional banking infrastructure simply wasn't built for them. It was built around them, and then it moved on. Remittances, money sent home by African workers abroad, total over $53 billion a year. But up to 9% of that money disappears in transfer fees. That's billions of dollars that never reach the families who need it most. Africa's crypto explosion. Let's look at the numbers because they're extraordinary. According to Chainalysis, Africa recorded the fastest year-on-year crypto adoption growth of any region in the world. Nigeria is consistently ranked among the top 3 countries globally for raw crypto transaction volume. Kenya leads East Africa with one of the most vibrant peer-to-peer trading ecosystems on the planet. South Africa has the highest crypto ownership rate by percentage of population of any major African economy. And here's the key insight for you as a trader. Most of this activity is driven by real economic need, not speculation. When Nigerian Naira lost over 40% of its value in months, Nigerians didn't panic, they pivoted to USDT. Stablecoins became a savings account. Bitcoin became a hedge. The mechanics, what this means for traders. Now let's get practical. If you're trading crypto and you're watching what's happening in Africa, you need to understand the unique market dynamics at play because they differ from what you'll read in most Western-centric trading guides. Peer-to-peer, P2P, trading dominates. In many African countries, centralized exchanges face regulatory restrictions or banking blockages. This has pushed a huge portion of volume into P2P platforms like Binance, P2P, Paxful, and local Bitcoins. As a trader, understanding P2P premiums, the price differentials between P2P rates and spot prices, can create significant arbitrage opportunities. Stablecoin demand is structural. In markets with volatile local currencies, stablecoins like USDT and USDC aren't just trading pairs, they're stores of value. The demand for stable coins in African markets is consistent and driven by fundamentals, not sentiment. This creates more predictable liquidity patterns for traders who understand this dynamic. The stories, voices from the ground. But data doesn't tell the full story. Let me share with you what's happening at the human level, because this is ultimately what drives markets. In Lagos, a nurse discovered crypto during the 2020 COVID lockdowns. She had no job, a family to feed, and a phone with internet access. She started by learning about USDT, then slowly began trading small amounts during peak Nigerian market hours. Within 18 months, crypto income had exceeded her nursing salary. She now teaches a community group of 40 women how to trade. In Nairobi, a 28-year-old software developer used DeFi yield farming to earn more in 3 months than he had saved in 3 years of traditional banking. He now consults other developers on Web3 projects, building specifically for African financial use cases. In Dar es Salaam, a small business owner who exports handcrafted goods now accepts USDT from international buyers, cutting out the expensive wire transfer middlemen who used to take a significant cut of every transaction. These aren't isolated cases. These are the early movers of a tidal wave, and the wave hasn't even crested yet. The challenges. Now I want to be honest with you, because any serious trader respects honesty over hype. The crypto landscape in Africa comes with real challenges. Scams and fraud are widespread. Many people have lost significant savings to Ponzi schemes dressed up as crypto investment platforms. Education is still uneven. Infrastructure, reliable internet, stable electricity isn't universal. For traders operating in or targeting African markets, this means due diligence matters more, not less. Diversification matters more. Understanding local sentiment, local news cycles, and local regulatory environments is a genuine skill that separates average traders from great ones. The future. What's coming? Let's zoom out to the horizon, because what's coming in African crypto is not a continuation of what's already happened. It's an escalation. Central bank digital currencies are advancing across the continent. Nigeria launched the Naira, Africa's first CBDC. Ghana, South Africa, Kenya, and Rwanda all have CBDC pilots or exploratory programs underway. Whether you view CBDCs as competition or complement to crypto, they are normalizing the concept of digital money to hundreds of millions of people. And that is bullish for the broader crypto ecosystem long-term. DeFi infrastructure built specifically for African markets is emerging. Projects like Celo, designed for mobile-first emerging market users, are gaining traction. Remittance-focused blockchain solutions are cutting transfer fees from 7 to 9% down to under 1%. These aren't concept papers. These are live products with real users. The African Continental Free Trade Area, the largest free trade zone in the world by number of countries, creates massive potential for blockchain-based trade finance, cross-border settlement, and supply chain verification. Crypto and blockchain technology are the infrastructure layer that makes frictionless African commerce possible. Africa has the world's youngest population. By 2050, 1 in 4 humans on Earth will be African. These are digital natives. They are growing up on smartphones, mobile money, and peer-to-peer apps. Crypto is not a foreign concept to them. It is native infrastructure. The traders, builders, and innovators operating at this intersection right now are not early to the game. They are right on time. So what's the takeaway? Crypto was always about more than price. It was about permission. Permission to participate in a global economy that was never designed to include everyone. What's happening across Africa right now is the most compelling real-world proof of that original vision. Not in Silicon Valley boardrooms, not in Wall Street trading floors, in villages, in markets, under mango trees. For you as an intermediate trader, the invitation is this: expand your lens, study African markets, understand the P2P dynamics, the stablecoin demand patterns, the regulatory environment. Follow developers and projects building blockchain solutions for the developing world. These are often undervalued, underwatched, and ahead of the curve. And beyond the trading, let this story remind you of why any of this matters. Every time you make a sound trade, every time you manage risk well, every time you understand the market better than you did yesterday, you are part of an ecosystem that is quietly, powerfully, irreversibly changing the world. In Florence, the Medici Bank created structured currency exchange across Europe. They mastered cross-border value. They engineered systems, and they proved wealth favors those who understand flow. When Richard Nixon ended the Bretton Woods system, currencies began to float. Opportunity multiplied, modern forex was unleashed, and now you sit in front of a screen connected to the same forces. Don't just watch this space, engage with it. Join communities of African traders. Follow the discourse coming out of Lagos, Nairobi, Accra, Johannesburg. Read the local news. Understand the emotional and cultural relationship that different communities have with money and trust, because that sentiment drives markets in ways that technical analysis alone will never capture. And ask yourself a harder question. Are you trading for yourself alone, or are you building something? Are you hoarding knowledge or sharing it? The traders who will matter most in the next decade won't just be the ones with the best entries and exits. They'll be the ones who helped educate, who helped onboard, who used their understanding of this technology to bring others along with them. And beyond the trading, let this story remind you of why any of this matters. Every time you make a sound trade, every time you manage risk well, every time you understand the market better than you did yesterday, you are part of an ecosystem that is quietly, powerfully, irreversibly changing the world. And ask yourself a harder question. Are you trading for yourself, or you're building something? From sand to screens, from exclusion to ownership, from waiting for the world to change to being the change. If this video gave you value, share it with one person who needs to hear this story. Leave your thoughts in the comments below. I'd love to know. Where are you trading from, and what does crypto mean for your community? Until next time, trade smart, think big, and remember, the screens were always meant for everyone.